Welcome to About Money. You know, the world is sitting at a time, investors are sitting at a time when everyone seems to be worried. Well, maybe not everyone, but at least 73%, according to a new study, are really concerned about what's happening in the world and with investments. They're worried. They're nervous. Can I maintain my quality of life? Is my plan adequate? Am I going to run out of money? The reality is that probably is valid. We think it really is valid that people are worried about running out of money, that people are worried that the market is doing different things right now. We see different things. We see that people should be worried. And I say that I've been in this business for 40 years, and during most of that 40 years, I've been optimistic. I've been able to say to people, just sit there and wait it out. Everything's going to be fine. It's going to work. Just ride it out. We're going to go through down times. We're going to go through up times. Just hang on. We have a strong country. We have a strong set of companies. They're getting bigger and better all the time. Not this time. Not this time. I'm seeing things today that we have never seen. And I think there's a phrase that we use all the time, saying things that have never happened before happen all the time. And I believe what we're seeing today is one of those things. People look and they're being told by their financial advisor, just hang in there. Things are going to be okay. I don't think so. When I look around and I see things that are going on, we've changed the world order. 40 to 50% of the revenues of the Standard & Poor's 500 companies come from overseas sales. Think about that. Half of the revenues come from overseas sales. Now, some companies are not going to be affected by tariffs and by the change of trade deals done all over the world. Some of those companies, like Starbucks, they have their restaurants in China, in England, wherever it might be, in Italy. They're not going to be affected by tariffs. Costco, maybe to a lesser extent, although Costco sources a lot of their product from overseas. They will be affected. You wouldn't think they would be, but they will be affected. We're living in a time in which a number of companies are going to be dramatically affected. You know, I live in West Seattle. I live across and can look across into downtown Seattle, but I also drive by the shipping yard where I see a lot of containers. And what I'm seeing is a yard that's empty of containers. It's not completely empty, but it's probably down at least 50% and maybe 70%. My office used to be next to an office from a company called Western Bulk Carriers, or Western Bulk Freights. They did bulk shipping, and I can remember most of the time, true confession, most of the time I would see him in the bathroom, and that's where we would get into a conversation. I'd say, how's business? And they'd talk about business. We'd talk about freighter prices. We'd talk about what was going on in shipping. But I can remember in 2007, they said there's something strange going on. I said, what's that? They said, ships coming into Los Angeles usually have to wait 2 to 3 days to get a berth to unload. They said, right now, there's 100 berths that are open. 2007. You know what happened during later that year and into 2008? We had the Great Recession. Today, when I look at the shipping yards, I see that there's a lack of containers. Usually, there's a number of container ships that are sitting in the Puget Sound, waiting to get into a berth to unload. Not now. In fact, the last time I drove by over the weekend, the berth was empty, or one of the berths was empty, waiting for a ship to get in. So there's something going on. When I look up north, towns along the Canadian border. Bellingham is a town that's very close to the Canadian border. It used to be full of Canadians coming down to buy things in Bellingham. People would tell me in Bellingham, and I lived in Bellingham for 18 years, but people would tell me in Bellingham that they didn't go to Costco on the weekends because it was so packed out with Canadians. Now they're saying you can go on a weekend and there's nobody in the store. There's nobody there. The Canadians have quit coming. The Canadians have put out this jingle or rhyme or saying, buy American, buy Canadian. BYE, American, BUY, Canadian. The number of Canadians coming down to the United States for vacation in 2024, 77 million Canadians vacationed in the United States. You know, this year, it's down almost 70%. That's had an impact on hotels. You know, in Bellingham, they say that the number of hotels, they're laying off people. The restaurants are laying off people. The gas stations are seeing that people aren't buying gas to go back north. And gas in the United States is a lot cheaper than it is in Canada. The taxes are much higher on gas in Canada. Canadians come down and buy gas in Bellingham or Blaine to go back into Canada. Not now. They're willing to pay a higher price just not to buy American. That's a real change. It's changed in the world order. Will that change? Will that flip back in a year or two or three? Maybe, but probably not. What we're seeing now is not one of those times in which you can say, just hang in there, it's going to be okay. No. And most investors have mutual funds or ETFs. You don't know what's going on in each one of the companies that make up the mutual fund and the ETF. You don't know how many are going to be affected by the lack of container shipments. You don't know how many are going to be affected by restaurants laying off people in the cities close to Canada. You don't know what's going on in the mutual funds and the ETFs. So when the financial advisor says just hang in there, things are going to be okay, we don't see it. We don't see it at all. We see that things that have never happened before happen all the time. Just think about this. It wasn't that many years ago when that little tiny piece of DNA, that little tiny piece of DNA, when you compare it to the human genome, when you compare it to the DNA strand of billions of pairs that make up our DNA, it was just a couple hundred DNA pairs, less than a couple hundred. But that DNA strand shut down worldwide business. It caused 7 million people to die. Over 1 million Americans died over that little tiny piece of DNA. Things that have never happened before happen all the time. And we're probably in one of those times right now. We're probably in one of those times. A lot of people now are reducing and going with less stock, more cash. Want to be safe. The markets are really volatile. A couple tweets in April will send the market up and down. Yeah? Being in cash can give you a sense of security, a sense that things are not volatile. But my wife went to the store the other day, and we buy fish at a Seattle Fish Company. She said that the cost of a pound of Dungeness crab, $74 for a pound of Dungeness crab. Pre-COVID, I was in once, I remember a couple times buying crab for $42. 50 years ago, that crab cost $2 a pound. Today, $74. King salmon is $57 a pound. Not that many years ago, it was just a little over 10. Putting the cash away gives you a feeling of safety and security, but it's not going to buy in a few years what it buys today. We're facing a time when there's a fear of inflation, and we feel that it's justified to have a fear of inflation. Inflation fears have subsided somewhat in the last short while, but we feel that there's a time coming when inflation is going to take off again. People feel that there's a recession that could be coming, and we feel that yes, the recession will finally get here, and you'll have a recession at the same time you have inflation, which is stagflation, which we experienced in the 1970s. And we know in the 1970s, bonds didn't do well, stocks didn't do well, commodities at times did well, and at other times didn't do well. Real estate suffered at times. Home real estate actually did pretty well during the 70s because you had the baby boomers coming up and buying homes. But we don't have a baby boomer generation right now. We don't have an emphasis on getting married and building a family. That emphasis has kind of gone away. It's a question whether what assets will do well. If you look at stocks, people will say stocks did it during the inflationary time period. No. 1966, the Dow hit 999.9, essentially 1,000 in 1966. Then it went down 20%. Then it went back to 1,000. Then it went down 30%, back to 1,000. Then down 40%, back to 1,000. Then down 20%, and finally back to 1,000 in 1982, 16 years later. Had you gone away to the Himalayas in 1966 and come back in 1982, it was said, gee, the stock market's been asleep for 16 years. No, the stock market wasn't asleep. The stock market didn't do as well. So what do? You know, we think there's lessons from the 1960s and 70s which, if applied, will work. We do. That's what we do. And would be willing to talk to you one-on-one. Every individual has a separate situation. No one has the same circumstances. Everyone's circumstances are unique. So if you have a question, reach out to me. Send me a message here on LinkedIn, or send me an email. But reach out to me here on LinkedIn. Ask me, tell me what your situation is, and I'll let you know what you can do to avoid a catastrophe. And yes, it probably will be a catastrophe if you just hang in there. There's a reason to be scared. There's a real reason to be scared. And if you're not scared, you should be. Think about it. Think about it. Think about your situation. If you have fears, they're justified. They really are. So what will you do? Will you just cower in a corner and sit back and hope that things work out? Will you listen to a financial advisor who says, everything's going to be okay. Don't worry about it. Don't sweat it. Do you believe that? Do you believe that? No. Send me a message here on LinkedIn. I'll be happy to talk about your specific situation. Be active. Be proactive. Don't be reactive. Be proactive. Take action now. Don't wait. It's Mike Adams, Adams Financial Concepts. Reach out to me.